In today's video, we will be breaking down the top 5 AI stocks to buy right now in June 2024. We will be diving through each ticker, breaking down what exactly they do, why they are worth a buy, predictions on how far they can climb and when, as well as, of course, we'll cover the risk. In order to find each of the stocks in this video, I looked at profit margins, revenue growth, market share, competitive advantage, key partnerships, scalability, industry impact, as well as, of course, current momentum. We are just halfway through the hottest year for AI adoption ever, and we've got quite the opportunity ahead of us. And folks, with Nvidia's meteoric rise continuing and Apple's massive investment into Apple Intelligence and partnership with OpenAI, well, now is the time to look for the lesser known stocks that are going to be the biggest players in the AI game over the next 1 to 5+ years. But at the same time, let me be completely clear. None of these stocks are just story stocks about the far distant future. No, all of these stocks are utilizing and reshaping our reality, utilizing AI in the present day. But first, a few messages. Firstly, if you're the one taking the risk, you got to be the one doing the ultimate frisk. Make sure to do your own due diligence on all stocks presented here on the channel. And today's video is brought to you by our absolutely free daily email newsletter link down below. Don't miss out on our research reports. We have some very exciting new stock ideas coming out for email subscribers over the coming days. And if you want to hear about them first, make sure to sign up with that link down below. Okay, let's get to work. So let's start with number 5, CrowdStrike, CRWD. Now, you need to know that one of the biggest concerns of the unprecedented speed and rise of AI is the cybersecurity threats, and this is a play on that. CrowdStrike Holdings Inc. is a leading cybersecurity company specializing in cloud-delivered protection of endpoints, cloud workloads, identity, and data. The company's flagship product, CrowdStrike Falcon, uses artificial intelligence, AI, and machine learning to detect and prevent security breaches in real time. Now, for context, I've been a big believer in CrowdStrike for years. You can go back to 2020 and find me praising the company, then 2021 and find me talking about price targets for the stock at $240. Hey, I actually looked pretty young back then, but unlike me, CrowdStrike actually aged pretty damn well. CrowdStrike long blew past those price targets, with it today hovering just under $400. However, at the same time, today, the demand for what CrowdStrike offers has only increased. And I'd argue CrowdStrike is now more relevant than ever. Its track record speaks for itself. Revenue is up nearly 33% year over year, net income up 8,620%, net profit margin up 6,542%, operating margin up 135%. So, in other words, this is a winner, and thus it deserves high marks as a top AI stock and why it made it to my lovely list today. But how much higher can this climb? Well, the average price target that analysts have put on it has it at just 3.77% more upside, and the highest price targets are a little bit higher at $435, which really isn't much more upside. But I believe that analysts are undervaluing the competitiveness of CrowdStrike and level of beating it's going to be doing in the coming quarters, and I think they're going to adjust upward as the coming quarters come out, and thus I believe that this stock has a lot farther to rally, especially considering the current momentum cycle that we're in. Okay, what about risks, Charlie Toe? Well, it is a very competitive market. The cybersecurity market is highly cutthroat, with many established players and new entrants continually innovating. But folks, I believe that it's worth the risk, because if you look at their track record and their competitive products, it makes sense that they would continue to be a leader in the overall space. Okay, number 4, OSS, One Stop Systems. This is a small technology company that specializes in hardware and software solutions that are essential for AI applications across a wide array of sectors. Now, OSS is strategically placed because they've been focusing on target markets where AI is a key driver of demand. This includes sectors like autonomous vehicles, smart cities, and advanced robotics, all of which rely heavily on AI technologies. By targeting these markets, OSS is positioning itself to benefit from the exponentially growing need for real-time data processing and analysis capabilities. What about proof of concept, though, Charlie Toe? Is there any proof of concept? Well, while some of the metrics have been back and forth, as OSS has been investing in themselves pretty substantially and scaling, well, the truth is that OSS has beat EPS estimates for the last 3 months, and sometimes by as much as 100% plus. And if you go over to the analyst price targets from Tip Ranks, they are averaging out at a price target of $4. At the current trading price, that represents at least 61.94% of upside if the company fully capitalizes on its significant market opportunities. Let's talk risk. Risquito. The big risk that you got to keep in mind here is that OSS has indeed shown variability in its financial performance, including occasional losses. However, if you look at the broader picture and the amount of scaling that they're doing and the proof of concept they've seen in terms of driving more and more revenue, well, I would say that it's worth the risk regardless of that variability in bottom line numbers. Okay, number 3, NNOX, NanoX Imaging Limited. NanoX Imaging is an innovative medical imaging technology company. They develop a commercial-grade tomographic imaging device featuring a special digital X-ray source. Their flagship product, nanox.arc, is designed to offer high-quality imaging at a fraction of the cost of traditional X-ray machines. In addition to the hardware, they provide teleradiology services and AI-based imaging solutions aimed at improving diagnostics and medical outcomes. NanoX's digital X-ray source technology promises to revolutionize the medical imaging industry by making high-quality imaging more accessible and affordable globally. Now take a look at the growth potential in the estimates that we're seeing here from analysts. The company is projected to experience substantial revenue growth, with estimates suggesting an increase from $15.97 million in 2024 to $53.39 million in 2025, reflecting a growth rate of over 234%. The average analyst price target is at $14.67, which suggests some 92% of upside from current trading prices. All right, though, but what about the risks, Charlito? Well, the biggest one that comes to mind are the regulatory and market acceptance risks. As a relatively new player in the medical imaging market, there are risks there. NanoX's success heavily depends on gaining regulatory approvals and market acceptance of its new technology. And quite frankly, any delays or rejections could easily adversely affect the stock. And that is just what you got to deal with when you're dealing with the small cap biotechs. Number 2, Palantir, PLTR. Palantir Technologies Inc. specializes in big data analytics. The company builds and deploys software platforms primarily for government and commercial customers. Palantir software is designed to solve some of the most complex problems facing organizations today, from defense intelligence to healthcare optimization and financial analytics. Palantir's platforms are versatile and highly effective. The company's AI platform, AIP, has been particularly noted for its capability to enhance operational efficiency and decision-making processes. And in terms of context, you can find us here on the channel calling the stock a buy at nearly every level, even as low as $7.28 just a year ago. Reasons to like this stock, though? Well, extreme proof of concept over many years, and being in a period where Palantir is seeing unprecedented demand for its products and is set up to see even more unprecedented demand as time goes on. But folks, that is not the core of why I've been a loyal believer of Palantir for years. The truth is, it's simple logic. The markets in which Palantir operates have high barriers to entry due to the complexity of developing advanced AI and big data analytics platforms and developing relationships with those that need them. Palantir's established reputation and proven track record provide a significant competitive edge over new entrants. Palantir's platforms are highly scalable and adaptable to different industries and use cases, and they've been expanding and adapting for years. And with operations and partnerships extending globally, Palantir is well positioned to capitalize on international opportunities. But Charlie, what about the risks? Well, politics is a big one. Given Palantir's still fairly heavy reliance on government contracts, well, any changes in government spending, policies, or political dynamics could adversely affect their revenue streams. Additionally, the competitive landscape in the AI and data analytics market pose continuous threats from emerging and established players. Palantir is also very susceptible to big winters. But that said, for the reasons mentioned earlier, I believe that Palantir is solid enough to overlook said risks. Okay, number 1, let's end with the elephant in the room, and that is NVIDIA. NVIDIA is the primary engine behind the AI race, and what most of the software the other companies are coming out with will be running on in the first place. So it would be a travesty to exclude it from this list. But at the same time, NVIDIA right now is indeed in its boom euphoria period, and it's at all-time highs. And anyone can guess how long that can last. The company is indeed having insane growth and easily justifying a large portion of its run, but at the same time, these momentum periods have very little to do with any kind of measurable financial metric and have a lot more to do really with crowd emotion. And so while NVIDIA is an excellent stock and the number 1 AI stock you could possibly buy if you want direct AI exposure, something that's almost guaranteed to be the biggest benefactor of AI in the near to medium term, well, still, you need to be cautious with it. You need to proceed cautiously, buying on dips and locking in profits during pushbacks. This is from Fortune, and it's an interesting quote to read. By August of last year, NVIDIA's stock was substantially overvalued by most metrics. Now, the problem has nearly tripled. NVIDIA's market cap had risen threefold to more than $1.2 trillion since the start of 2023 to notch the biggest short-term valuation jump in the history of capital markets, a rampage that drove its PE multiple based on the past 4 quarters of GAAP earnings to well over 100. 100. Now, that being said, keep in mind, I'm also someone who argued NVIDIA was a buy last summer with a similar strategy that I'm proposing today. Last summer, I made a video arguing in NVIDIA's favor, and at the time, the stock was trading at about $502, which is the equivalent split adjusted of like $48 today. People argued at that time that NVIDIA was way overvalued, just like they are doing today, and you should avoid it like the plague, blah, blah, blah. But moral of the story, a company can run way faster than you think its real value should be, especially when said company is actually experiencing exponential growth. My suggestion with NVIDIA is to approach it as if you were riding momentum that eventually will die off. Once it dips, then you can consider a value dip buy, but until then, it's simply a momentum trade. And by the way, folks, options can go very, very far in riding said momentum. But anyways, if NVIDIA dumps 30-40%, then we could start making a strong argument for a dip buy based on a value proposition. But right now, it's an opportunity simply for momentum riding, and that is my take. It is the top AI stock, but if you want to dip buy it, you got to get it at a good deal. And if you want to buy it now, you got to go into it with a stop loss and an idea that you're really just here to ride momentum. Anyways, folks, that caps off today's video. Make sure to hit that ravishing like button and subscribe. Make sure to sign up for our completely free email newsletter report in that first link down below, and we will see you in the next video.